Good morning, everyone. Hope you can hear me okay. On for an hour in here on Triple Witching. That's always scary. And just to let you know, if you joined us from Chart Patterns Mastery, um, I'm going to be incredibly active on getting you in or out of trades. So just keep that in mind in there. And I would keep that going just so you know. So if you're in there, so just in the chart patterns mastery, just keep in mind I might not be able to go and show you everything of the exits. So I would tune in here. I'll try to do my best. Try to do my best in here. In fact, chart patterns mastery, I'm taking all of 30 cents in HUBS. Let me put that in here. Bunch of BS that stock. So let me put that in here. I mean, things are moving fast and furious. So just so chart patterns mastery, we're still in GNRC. We're short dizzy. Boy, that stock looked good. Now it doesn't. So there's a lot going on because it's triple witching. So we're busy. But just to let you know, this is the first thing you probably want to know. This isn't proprietary. I don't have any of the colors up there. But we're long GNRC and we're short Disney. Now, Disney looked great and we're still short. So we bought the 102 puts. We actually bought the 102, 101, 100 put fly for like 28 cents. Right now it's 40 cents. So not bad. So we're in that one, not bad. And we're staying in it. So Microsoft, we're not in. HubSpot, we got in because a lot of the group was going up, but this stock is acting like dirt. So we're out of HubSpot. That's what I was just posting, just so you know. So we were just posting that. So give me a second. And GNRC, I'm shorting more stock against our position. So we have a 1x3x2 on. If you want to go into GNRC and go in and get out of this, because, the whole market looks dicey. Well, right now you can get out of this for like two. You can take your double. So let's just go in. And like I said, Chart Patterns Master, I hope you're tuning in here. It doesn't hurt to take a double on half in this type of environment. So right now, I shorted stock against it. But boy, I mean, 210. Let's see if we can get out. No, but you could sell the calls at 210. Just keep that in mind. So I'm actually going to cancel it. The stock's acting great. So we're up double in there. Now we're really in to, just so you know, we're into taking house money. So what I mean by that is if we bought that spread at $1.18, which we did, and the market looks this dicey, I have no problem getting out of half. So let's just go in. If you want to know, we bought this spread. So we bought this butterfly. I did this in 2 different rooms. So we bought this So we're adjusting constantly. Remember, I was on the floor a long time. I know how to adjust. There. We bought that at $1.70. But then we turned around and we sold the 139, 143 call spread at 52 cents. So what we did is that's like buying the butterfly, the 1x3x2 for $1.18. So right now, I'm going to try to sell that for 210. So let me go and try to do it just on half, trying to take a profit. So, and I'll post it in there in the chart patterns mastery. But in this crazy market, I think you take house money on half. That didn't fill me. So what am I going to do? Well, I'm going to short stock right in here, but I'm sort of surprised it didn't fill me. So let me go and put 197. I'm going to put 195. Like I said, if the whole market was going crazy, I wouldn't even think of selling this. Well, I can't get filled, so screw them. I'm canceling it. Canceling it. And when this happens, I just want you to know when you do a spread, you're doing certain deltas. So basically, I'm shorting a little stock like posted in here against our position. Now, you might say, why don't you just buy back the 39s at 10 cents times 2, 20 cents, and try to sell these at 230? Well, that's $1.90. I'd rather just try to stay in a little longer. So just let you know what we're doing. Now, when it comes to the broad market, number one, bullish and bearish flag. So let me show you what we're talking about in here. And this is what we've been doing. The biggest thing that so many miss is you got to find what everybody is keen off of. What everybody is keen off of. That's what you're going to have to do. And so right now, what are they keen off of? They're keen off of NVIDIA. Like warned and harped on and acted aggravated about, do not trust this call wall garbage you see. Why? Because I was on the floor. It's about evenly dispersed calls and puts. The reason things go to open interest is not because one side has a lot of open interest. It's because spread traders have to unwind like this. What's in here? Well, you don't have a lot of open interest on the left. You don't have a lot on the right, maybe 135, which is scary, but a lot at 140. I think that's one reason it's staying up. So just that's the way I look at it. So that's why it looks like it's staying up. In my opinion, that's one reason we stayed in. But NVIDIA, I can't stress enough on how you have to not just think it's spoon-fed of call wall, so that means to buy it. What it means is nothing. It means absolutely nothing. So you got to combine it with other factors. So if you want to combine open interest, where's the open interest? Well, it sure look evenly dispersed. Look at that. Not bad. 105 and 50,000. But the problem is some of the other ones, 135, 91 and 126. Not bad. That's why we were bearish at 139, but you had to combine it with a chart pattern. That's all. You have to combine it with a chart pattern. So when we saw that open interest combined with, and I warned about this when I was on earlier this week, you got to look for those trend line breaks. That's why we were short. Those trend line breaks. So you're combining the open interest with this stupid rebalance thing where there's 100 million that has to be bought, and you got to think that's already been done. But before you think that, just use the chart. Don't listen to this 140 is where there's a lot of options. The second this broke, if you were buying it, you better be out when it does that. Definitely an unwind going on where people have already bought in anticipation. Just like Apple, they were selling in anticipation, and now it's going up. It's doing much better than the broad market. So definitely keep in mind, try to have 3 reasons to do a trade. Just try to have 3 reasons to do a trade. That's what I do. So we're still in GNRC, and that's where we are right now. And keep in mind, if I'm quiet, it's because we're doing a ton of trades in here. So we're constantly managing our trades. So that's just what it takes. You constantly have to measure, you have to respect all these trades going on. So that's the problem. You have to just have these going. So give me 1 second. I have one thing after another I'm showing everybody. So that's where we are right now. Basically, you're just seeing this rebalance. So there's an XLK rebalance where they have to buy NVIDIA, sell Apple. But like we warned, you just wait for that turn. So now Apple looks like a bull flag. So Apple could pull up the NASDAQ, no doubt about it. The key right now is NVIDIA. And the key with the NVIDIA is when that reversed yesterday, it pulled down the NASDAQ, which pulled down the ES. If this stabilizes, darn right, you could see everything going up. So that's what I'm watching. So if I put this is 4 time frames. Let me share this. Like I said, nothing in here is proprietary. All I'm doing is I'm using a 20 simple moving average. Intraday charts. This is what the big hedge funds use. 20 simple ATR trailing stop. That's it. That's all we're using. So, and MACD, overbought, oversold. That's all we're doing in here. So let me share this with you if it works. There. 4 grid day trading setup. Now let me go put this over here. No, I don't agree. I don't know. I really don't know. I do know Apple looks like a bull flag. I mean, definitely looks like a bull flag. So I think that's the big thing to watch. So, and also this, if you see NVIDIA start rallying at the end of the day, then you're probably going to see Apple sell off at the end of the day. But at the moment, I can't tell. It seems to me that a lot of this is already in the stocks. When I see that kind of reversal pattern, and if you're new, I've harped on this reversal pattern that you have to wait for that and then the oversold rally to even think of shorting NVIDIA. That's why we shorted NVIDIA. So I'll show you that also. I want to be sure I'm not getting anybody in anything wrong. No. So let me just show you a number of things. Number one, I'm going to go to a 2-grid chart, or we could go to Trading View. I want to show you what we're doing. Number one, S&P futures really haven't reached their lower objective yet. Do not use SPY. They went ex-dividend. SPX, has that reached its lower objective? Yeah, sort of. But then it becomes a point of contention. Is this support just one little twerk? Or is that the support? To me, that's the support. But the key I'm watching is that NDX. The NDX has hit support. That's why the NASDAQ's rallying. Yeah, the NDX hit support. So I'm still in GNRC, by the way. And the reason I'm in GNRC is because the NASDAQ hit support. So I just can't stress enough that I see 8 million services that talk about this and that. Just go make it as easy as possible. Prior tops become support. That's it. No more, no less. Prior tops becomes support. That's all it is. No more, no less. So the more tops, the more support. So if you want to go backwards, there you go. The more tops, the more support. So how about the SPX? Well, that's a point of contention. That's what I was saying, because that's not really a top. But, you're getting the rotation going on, no doubt about it. I'm not going to mess with Apple one way or the other, because I got to think, and answer your question, Papillon, I got to think a lot of that's already in it. You can tell because of how bad NVIDIA's acted. So that is definitely pulling up the NASDAQ. The second that started going up, you do not short the NASDAQ. The NASDAQ went down because of NVIDIA. So no way I do that. But I wanted to show you this. So here is two different charts. On the left, and like I said, if I'm talking fast, we're trading a lot. So just keep that in mind. We're trading a lot. So you're seeing the NVIDIA, and you see the left a 4-hour chart. On the right, I'm just going to show you the NASDAQ. You're going to see that the NASDAQ has done the same thing. So NVIDIA has pulled up the NASDAQ. The big red candle in the NVIDIA has led to a big red candle in the NASDAQ. NVIDIA held the first line of support, that 125. The NASDAQ has held the first line of support. Now you see why you don't, and we call it shorting in the hole. You don't short in the hole. So I just can't stress that enough. Do not short in the hole. In the hole means shorting at support when it's oversold. That's why it's so important to have 4 time frames up. Look at this right here. This is what I mean shorting in the hole. When right here on the upper right, it's oversold at support. Guess what? It was oversold here at some support and it formed a bear flag. We came in short because it's still oversold, but it formed a bear flag. It didn't have a spike up, not a V. So now it was oversold at support. Support being that red line on the right. That's what I mean by shorting in the hole. You don't short in the hole. So when this brought down the markets, when this came back, look at the similarity. When this came back on the left, this came back like a champ. In fact, the NASDAQ's up. So just keep that in mind in there, that the NASDAQ was held down by the NVIDIA. So then you got the other thing, the big deal. So many have talked about on how there's divergence. How many of you heard there's divergence with the Russell and the transports and all that? Probably everybody has heard about the divergence. Well, the first thing to know is the Dow theory. Just keep in mind, Dow theory has to do with the transports in the Dow. Does not have to do with the NDX. You see the transports down here? Yeah, the Dow doing that. So it is a little bit of a divergence, but I'm telling you, if a lot of people think that this is going down and this is going to pull down the NASDAQ, keep in mind the transports are really not that far from their highs. Really not that far. In 2000, they went down 50% before the overall market did. This is nothing. That's a divergence. The other thing, I've talked about the bond market, and the bond market's acted fine. Give me 1 second. So I'm back. So that's the thing. don't worry about this. And like I said, try to have 3 reasons to do a trade. Chart Patterns Mastery, I just got back in Hubs. HUBS, back in at 554.5. Sounds like an FM station. So Disney, like I said, I took a profit in the stock. We have a put. That's it. So we're in GNRC. It's acting great. So just keep that in mind. If the NASDAQ's going up and GNRC wouldn't go down before, why the heck should I get out of GNRC now? Just keep in mind, we look a lot at relative strength and weakness. So, and I will constantly adjust stock if I have to. Yeah, and keep in mind, if I short a little GNRC, Chart Patterns Mastery Room, and I lose $5 on 10 shares, but I doubled my money in the butterflies, I'm staying in it. And why would I stay in it? Because Nvidia went up. That pulled up the NASDAQ, which to me means if a stock was already acting well, like GNRC, and acting like a bull flag, why should I get out? So now that 1 by 3 by 2, we talked about it at $2, it's $2.35. So I'm staying in it, going for the 138 gap at the minimum. So just to let you know, Chart Patterns Mastery, if you're watching that. So just keep that in mind. Like I said, the XLK, there's a couple of other things you should know about the reshuffling. Number 1, a bull flag is a bull flag. Remember that when I got on. Number 2, Broadcom had a sell program because of the rebalancing. Did it come back? Not much. So, you know, but it's thinner. So it's going to be influenced more. So right now, we're Chart Patterns Mastery. Let me, I'm actually going to go and triple broadcast. Chart Patterns Mastery, I got to triple broadcast because I got to show you all this. I'm hoping this doesn't blow up the bandwidth. So just to let you know, Chart Patterns Mastery, I'm still long GNRC. I'm back in Hubs. So I'm in small stuff. You know, we've had a good day. I'm going to leave it that way. By the way, we have our deck being replaced, so you're probably going to hear some doggies barking. So just to let you know. But right now, Chart Patterns Mastery, if you're in here, we still have those unbalanced flies in GNRC. It's really funny because almost you don't want it to go up too much. So you can always buy back the 139s. You know, in this type of market, if the NASDAQ's up enough, yeah, this could go to 139. So we can always go and buy back like 1. I didn't get it. That's my bid. So right now we're fine. You know, you almost don't want to be too right, obviously. So that's where we are at the moment with all of this. So in there. So just keep that in mind about all of that. So Disney, I'm sure I'm wrong in Disney with the whole market going up. And like I said, we're long GNRC. And this was another thing. We just talked about the Dow theory. I can go back with you and I'll do it. Let me, and you can go back to the Dow theory. And the whole idea about the NDX going down, you know, the whole thing in 2000 and Cisco and all that. I just can't stress enough. I'm going to take off the MACD. And I can't stress enough that when the NASDAQ went up in 2000, I just want to show you this. I'm going to go way back. Sort of like Chris Berman talking in the home run derby. Way back. Because I think this is really important. Here you go. There's your NASDAQ. It kept going. I mean, keep in mind, it kept going. So just keep that in mind. So just kept going. So why am I showing that? Because go and look at the Russell over here. And as you, when I go back, if you go all the way back into here, you're going to see the Russell had a massive divergence. I was trading then. I know everybody and their mother was talking about this negative divergence. When you see this on the left, that mania, and this is down here, almost every single time, this play is catch up, not the other way around. Just keep that in mind. This play is catch up. Usually the tops are when this goes to a new high as well. Believe it or not, I know that sounds counterintuitive, but that's the way it works. Why am I showing this? Look at the NASDAQ. I'm going to take off the drawings. And then on the right, on that same vein, look at the XBI. Now, not back then. We are long the XBI, betting on that kind of, kicking in gear. Now, it was ugly for a day or two, and that's why we did them as low-risk butterflies that were a broken wing. But so far, so good. So just keep that in mind. So far, so good. What else? NASDAQ not doing much, and guess what? Bless its heart, the transport's up, and the Dow doing nothing. But they're not down a lot. So you're getting that divergence. But like I said, it's the NASDAQ that I thought would go up. If the only reason it went down was NVIDIA. So if NVIDIA is rallying, guess what? To me, that just means the NASDAQ's going up. So like you could put over here anything you want. Let's put in JP Morgan. As you see, why is the ES not moving? Because a lot of the banks aren't moving. Now, in answer to your question of, is there going to be some kind of like sell program at Apple on the close? Well, the way I look at it. So is there going to be some sell program in Apple on the close? Well, I'll tell you on how I want to play it. I put up here NVIDIA so you can see them side by side of the similarities of what's going on. Pretty cool. But the way I'm looking at this is if NVIDIA up here in the middle top, if this goes crazy on the very close, we're going to buy cheap puts under the market. So just keep that in mind. That's how I want to do it. Just betting that that's sort of an anomaly. Just like if Apple gets pounded under 210, I'll try to buy the 210 calls and get out after the close. I'll get out of stock. So that's how I want to try to play it. So I'm not out of GNRC yet. Like I said, we're doing a lot of trades. So The thing with Apple, it's extremely advanced, and unless you're in our room, I wouldn't touch it. So it has to do with trading after the close and calling your clearing firm to manually exercise calls or puts. So keep that in mind. Second, regarding any kind of seasonality, it's the same thing. You can't be spoon-fed and think it's one thing. I don't mean you, but anybody. Combine 3 reasons. Just keep that in mind. Combine 3 reasons. So if you go through this, you're going to see that it's extremely, you just got to combine a lot of things. And when I mean combine a lot of things, I like 3 reasons to do a trade. Now, I might only need 1 reason to get out, but I'm telling you right now, here you go. Here's your seasonality. Here's your seasonality. Here's July. So as you say, you might be up, you might be down. You got to combine it with, I like having at least 3 reasons. At least 3 reasons. August, no bargain. September, no bargain. October, no bargain. What's that mean to me? It means bearish patterns are more likely to work. That's all it means. No more, no less. Everything. So November, December, bearish patterns are less likely to work. So that's the way I look at that when it comes to seasonality. And if I see lousy charts, sure as heck, I'll play them on the downside. No doubt. So that's where I am when it comes to the broad markets. Is definitely, you might be right about Apple. You might be right about something pounding on the close and something pounding NVIDIA on the close on the upside. But I'm not doing any of them betting on that happening now. You know, I'm happy to bet on that later, but I'm not betting on that now. So, in fact, let me see. So you can't get out. Well, I'll show you. So the thing is, if you're not familiar with it, don't do it. This is an extremely advanced strategy. But if you have Apple, and you have the 212, let's say it's 212.5 on the close. Well, no, let's say they pounded to 210. Let's just say they pounded to 210. Let's say 209, 209.80. And on the close, you buy the 210 calls. And the only reason they pounded is because of this rebalance. Well, after the close, you have an hour to call them up and say, yeah, I want to exercise my out of the money calls, and then sell the stock. You have an hour after the close where it's guaranteed, and then a half hour that's best efforts, just best efforts. Now, just to let you know, you can go into your options, and actually there's an exercise button. But the point is, you have to have the equity in your account. So if you have like 3 calls, you better have $60,000 of Apple of cash to be able to do that trade. So just keep that in mind. But we've done it in NVIDIA. We might try it again in NVIDIA. So we might try that again. So that's the thing, is if the NASDAQ went down because of NVIDIA and NVIDIA starts going back up, so I'll put NVIDIA on the left, then there are no reasons to short the NASDAQ. and the NASDAQ hit that support. So you're combining more than one reason. Just keep that in mind. You're combining more than one reason. Always have more than one reason to do a trade. So I don't care if it's a squeeze. I don't care if it's option volume. I don't care what it is. You got to have 3 reasons to do a trade. So if you see unusual option activity in, let's say, the NASDAQ here when it's at support and this is rallying, well, heck, that's 3 reasons for you. So now, not sure what I'm going to do. Now's just a time to try to decide what we're going to do with our profits. So we've had a really good day and we're going to keep them. So the biggest thing I'm watching is, do we take half in Generac? Remember, that's a hurricane stock. And that's where I am right now. So we're getting a total opposite of yesterday. You're seeing the NVIDIA go up and it's sucking the life out of the Russell, and the XBI is fine. But if we have XBI, so chart patterns mastery, don't be afraid to take some money out of there. So that thing is probably about 270. Let's see. Yeah, I'm going to stay in. It's $3 in the money. I'm going to stay in. And that's where we are with the markets. I think they're acting pretty blah. Now, the other thing, a lot of people have asked this, and I'll show you some misnomers at least that I hope this helps you. Like I said, NVIDIA with any kind of rebalance is sucking the life out of the rest of the everything, the tech stocks. And also keep in mind that XLK rebalance, there might be stock to sell in some of the other things. So just keep that in mind. There. Chart patterns mastery and the central room. I just had to do it. I took a double on half. So let me go put that in there. Now I'm quadruple broadcasting. Just had to do it. There, I have all these different rooms. So sorry about that, but I think I have a responsibility to put that in. So we took a profit on half. So all we're doing is we're playing with house money. So if you're wondering what we're talking about when I talk about house money, is if you buy something, 2 of them at $1.18 and you sell one at $2.10, well, now the average cost of the other one is 8 cents. That's what I mean by house money. So far, so good when it came to that. So that's what we did. So chart patterns mastery, we took the double. So going in there. So what's the next thing we're doing? Well, we're not in NVIDIA. We're not in QQQ. We have a tiny position in pot stocks. And we have not much else. Got a one lot in Disney. We covered our stock. So what am I doing? I want my powder clean for later. So you see Amazon going up, NVIDIA going up. I'm going to put NVIDIA. Well, you see it versus the NASDAQ. So NVIDIA had a downtick. This had a downtick. Now, what do I think for NVIDIA next week? Well, I think NVIDIA, we were in butterflies. Not panicked out. We did fine. But theoretically, I think that's about it. After that kind of big red candle, now you got to look to sell premium. You don't go and buy it saying NVIDIA is the best things in sliced bread. Well, it's the best things in sliced bread before the rebalance. So we're looking at something like that. That's expensive. I don't like paying $255, but something like that. And the reason is when something has a big red candle, that's usually the end of the move. And as you see, it's filling the gap. And the gap doesn't mean it has to be filled. It just means that when it's rallying, that's the path of least resistance. That's it. But let's go and I want to show you this. I want to go into on demand. So we're going to go in here and I'm going to show you 3 grid. So there's 3 grid. It's actually 2, but I have so many 2 grids. But I want to show you this with on demand because so many get this wrong. Here is Tesla after the split. This is the rewind function of Thinkorswim. So many on the internet were talking about, NVIDIA is going to get crushed after the split. It's not the way it works. It works like this. This is the day of the split, August 31st, when it actually split. Didn't go down. Look at that. There's the split is right there. Then it had that. Then it had that kind of consolidation where you could draw a defined trend line like I showed you today. Now, before you think that's a one-off, believe it or not, they split again August 31st, 2022. So we're going to go to September 6th. So there's your split. This one happened exactly there, but what do you notice? The defined trend line. And that was it. The big reversal candle followed by the defined trend line. So I'm just telling you, that's how they usually work. They rally into it, and then you get that defined trend line. I mean, that's what I've seen. So just keep that in mind. So the other, like I said, have 3 reasons to do something. So I always go the farther out the time frame to me is the most important. But it really doesn't matter. If you see NVIDIA going down and that's the thing that made the NASDAQ go up before, then, it's less likely to go up. Let's just put it that way. All about probability. But I can't stress enough about house money. So house money means winnings from earlier. I know it sounds like that's what it is, but it is. And the reason I bring that up is I can't tell you how many people try to mess around with, let's say, a GNRC. And they do that 1x3x2 for $1.18. And then they're like, it's going to $4. And what happens? It goes to 0. Well, if we got out of one at 210 that we bought at 118, if it goes to 0, yeah, we lose $8 net. On the other hand, we feel like geniuses for selling half. So that's what we mean by house money. So a lot of times, let's say we buy, like I bought, GTBIF, I bought 10,000 shares. So I sold 3,000, made $450. Sold another 3,000, made a lot, And basically, then my cost basis is so low, I could stay in the rest. That's what we mean by house money. As you see, this is amazing. NVIDIA sells off, NASDAQ sells off, Amazon sells off, and so on. All the NASDAQ stocks. And you're right, Broadcom never went up, but that might have some kind of rebalance today. So just keep that in mind. And what am I going to do in today? Well, I keep trying to find if there's a tell. So is there something on Twitter? Now, don't laugh. But I go to Twitter and I go to the search bar. This isn't premium. I haven't subscribed. I go to the search bar and I'll put in triple witching. Now, I'm sure there's probably 10 million of these are competitors, but forget that. And when you look at this, don't laugh. I put it as latest. All I'm doing in here, I don't want to hear triple witching to test market com. I don't care. But sometimes you get some fund managers that will go in and they'll say what's actually going to happen. It's a long shot. But sometimes you get that. So analyst says the option expiration will be the largest ever. How on earth does that help me? It doesn't. But the whole key in here, sometimes when you go through this, somebody actually has a list of what's to buy and what's to sell. Heck, this has taken me, 3 minutes? It doesn't hurt to do it on Twitter. You can do it on Google. Just put in triple witching. You'll probably, don't put in images. You'll probably get a lot of witches. So, but you can do it like that. So just put in there, triple witching. Then what you do is you go to tools and you go like the past week. There. Does that tell you anything? No. But sometimes, and I'll go through everyone for my subscribers, but sometimes somebody knows something. So believe it or not, sometimes I'll go into Reddit. So sometimes Reddit has it. So you put triple witching Reddit. And I'm just telling you, sometimes somebody knows something. So I know that sounds unscientific, but if it works, it works. And that's the way I look at it. And you're dead right about this, by the way. Like I said, I love going on multiple time frames. So let me go back to that multiple time frames I was showing you. And you have a great point about if something's over the ATR trailing stop and something's under. Combine the big stocks. So if you see this and you see the ES under the ATR trailing stop here, but over it here, but the big stocks are selling off. They're not right now. Actually, JP Morgan's rallying. But to me, that's a push. So I just don't mess with it. But it's a great point. But usually when that happens, I take the hourly as my trend. I take the ES of telling me I shouldn't short. But that's a great point on your part. So Java, just to let you know. And keep in mind this, Dino, something I didn't know about. So let me go in here and show you. There, HubSpot. Go into HubSpot. Right click. Exercise. You can do it yourself. It's really cool. So that's a different account I have so I can show you. But it's really neat that you can right click on that. So, and you have an hour. You're guaranteed your exercise for the first hour. It's then best efforts the next half hour. So that, which means they can reject it. And they can also reject it if you don't have the money in your account. And by the way, Chart Patterns Mastery, I'm still long GTBIF, even though it looked like it was getting killed. Now, here's another thing. Here's a great trader trick for you from all the years I've done this. GTBIF has a rumored takeover. So they supposedly sent a letter to, they're a pot stock. They sent a letter to Boston Beer saying they're interested in a combination. So 80 to 90% of takeovers are over the weekend. So I just can't stress to you on how many times this stock closes on the high on a Friday. It's amazing. Not everyone, but a lot of them. And that's why we bought down here, betting on that. But you got to be out by the end of the day. But a lot of times, whether it's HubSpot, which is rumored with Google, GTBIF, maybe one of the drug stocks like VKTX, they have a habit of rallying on the close and selling off right after the opening because everybody's mad it didn't get taken over. So that's a little trader trick for you. Dino, I didn't know about that till I called Schwab last week. And they said, you can do that yourself. But there's a problem with that, Dino. If I go into NVIDIA, and let's say it's 131 on the close, and I want to exercise the 130 puts, because right after the close, the stock's getting murdered. I don't know how much equity I need. So a lot of times I don't do the right-click exercise. I call them and say, can I stay on the phone with you and exercise one and buy it? And a lot of times they'll look at it and say, they'll do it as a cashless transaction, believe it or not. It's pretty cool. And like I said, I am not buying under the ATR trailing stop. When I see something over on one thing and under on another, I just back away. I just don't trade it. So like this, it's over the ATR trailing stop. It's under it here. It's overbought at resistance. Doesn't mean I have to short it, but I sure as heck aren't going to buy it. All about probability. That's all I do is probability. And in the long run, we've seen that works great. So that's where I am with all of this. Like I said, see NVIDIA, the probability that a 15-minute NQ over the ATR trailing stop, the probability that it works goes down dramatically if the stock that made it go up is going down. It doesn't mean you have to short the NASDAQ, but I sure as heck am not going to buy it because of the probability. So if the whole market went up because of NVIDIA and NVIDIA is going down, then the probability is the SX isn't going to break up. So I'll show you what we're talking about. At least this is how I'm doing it. And I try to talk out loud in the room all the time. Right here. So you had the NASDAQ here. I'll just take the NASDAQ right here on a 1-minute chart. Heck, you don't know if it's a bull flag or a bear flag. But the probability of this breaking up goes down dramatically if the thing that made it go up is going down. So if this had a bull flag or something and it failed, and that's another thing, what's the probability of this going up? The probability goes down dramatically if it's overbought at resistance. Overbought at resistance. Probability of the bull flag working goes down dramatically, which to me means the probability of this breaking up goes down dramatically. So just, just keep that in mind. That's what I'm looking at. So I don't know what you mean. All I know is I buy small size. Look what's going on with Chart Patterns Mastery. I'm glad you saw my post about this. There you go. Rumor takeover. Holy cow, look at that go. So pretty cool. So never got out. Stops would be at the low. Well, I was staying in no matter what. So that's just what I do on a day like this. So that's what we're doing. And basically, it's probably going to be pretty darn busy the last couple of hours. And I could have gone in here and bought a put. I like when I buy premium with 0 DTEs, I like a defined chart pattern. We have had more luck playing 0 DTEs for the following day. That's what we did in NVIDIA, QQQ, GNRC, the following day. So we don't have just a binary event that day. And that's how we've been playing these things. And it's worked pretty well. So like I said, 4-period time frame. I use the ATR trailing stop on multiple time frames. So the most important, and now you see why I didn't trade it big, because it's under the ATR trailing stop. But I know this stock at the end of the day has a habit of rallying. But I'll show you. So on what you're saying, do I use it on an hourly? I sure do. But like I said, it's not just ATR trailing stop, it's chart pattern. But if I saw this chart pattern, which we had back here, you see that little inverse head and shoulders followed by a bull flag, and an inverse head and shoulders followed by a bull flag? That's when I trade bigger. This is where I bought 10,000 and sold it on the way up. Here I bought a couple of thousand, sold it on the way up. You got to wait for that, but most people don't want to wait. And they don't want to wait. And what they do is they buy on the way down. The first uptick, they're thrilled they got out. So that's at least how I do it. So, and I hope that helps. So now what do? Well, now in answer your question, do I use ATR trailing stop? Look at this. This has no defined pattern. That's why I bought 400 shares instead of 4,000. It just didn't have the pattern to make me want to load up. So you're right, it had differing things. Debit spreads, while they don't have them on these, sure, I'll use debit spreads. We do debit butterflies all the time. If I see a defined pattern, sure, we'll do a put debit spread or or a call debit spread. Sure, we will. But keep in mind, I was on the floor for 8 years. Almost all the time, we sell credit spreads. So because premium is your theta is your friend. So take care. Hope that helps.